Tonight, Americans and the markets absorbing President Trump's sweeping new tariffs on U.S. trading partners. Hello and thanks for joining us. I'm Frank Malloy.
And I'm Lori Johnson. We've been talking about these tariffs for days now, but exactly how much are they and how do they impact you? Here's what we know. The president placed a 10% tax on nearly all trading partners. He's adding reciprocal tariffs on countries that have trade surpluses on the U.S.
China faces a 34% tariff on top of what's already being imposed, and the European Union faces a 20% reciprocal tariff. The 10% tax on almost all trading partners will take effect over the weekend. The White House says the taxes are roughly half of what countries are charging the U.S. It marks what could be a tough transition for both consumers and businesses.
This is a live look at the drop in the stock market. The market closed at 4 this afternoon with its worst drop since the COVID-19 pandemic. Everything from crude oil to big tech stocks fell.
Investors are worried the tariffs will affect company profits and consumer prices.
Hunter King spoke with 2 economic advisors about what this could mean for you.
Investors watched nervously as the stock market experienced its worst day since the pandemic. Financial experts warn the market volatility could signal tough economic times ahead. James Griggers, a financial planner in Warner Robins, believes a recession could be on the horizon.
In the short term, we're going to see some volatility in the markets. We're going to see some unemployment go up. We're going to see some inflation go up. And so we're in for some tough times in the short term.
Major banks have raised recession concerns, but financial advisors say your response should depend on your age and retirement timeline. For those closer to retirement, Griggers recommends safer options.
Typically, the safest investments you're going to find are government-backed securities. So whether that's U.S. Treasuries, certificates of deposit, some agency bonds.
Sherry Goss from Lifespan Wealth Management advises against panic selling.
I would just hang in there, don't react, read truth, pay attention to what's going on, but don't panic and don't panic sell.
And for younger investors, well, Goss sees opportunity.
If you're young and you're investing, this is the time to be putting money in because you're buying it at a discount.
Both financial advisors stress the importance of seeking personalized advice based on your financial situation. Reporting in Houston County, Hunter King, 13 WMAZ News.
The Federal Reserve is scheduled to meet next week to discuss interest rate policies. An economist from Middle Georgia State University says you can expect to see prices rise on your food and clothes in just a few days.
Greg George says whether you're rich, poor, or somewhere in the middle, you will feel some effects.
There's this assumption that tariffs are somehow good for the economy. They're not. They are painful. They are a tax increase, and they're a tax increase on U.S. consumers and U.S. businesses who rely on these cheaper imports, and so it will hurt.
If you take a walk around your home, you'll probably see a lot of items that say made in China. The United States is the world's largest importer of goods.
So George says businesses that sell those products will probably ask you to take on extra charges. He says President Trump hopes these countries will remove their tariffs on the U.S. and we would do the same in return.
If it pays off, then we may get to that point where we have free trade and everybody is back to a level playing field. That hopefully is the goal. And if that works out, then we'll be in good shape going forward. But there will be a little bit of pain in the short term.
George adds these tariffs don't just impact our imports. He says it will make it harder for U.S. businesses to export goods because people overseas can't afford our products. One example, local pecan farmers. They send their nuts to places like China, but with these tariffs, they'll get more expensive and could force Chinese buyers to source from other places. On top of that, it could get more expensive to run the farm. If other commodities get more expensive, so will the price to maintain the farm.